Bitcoin at 76,000. Is it a breakout or a bull trap? Hey guys, it's Keith Allen. Welcome to BitBreak and welcome to the show. If you are new to the stream, how you doing? Glad to have you with me. If you're an OG, I'm even happier. My goodness, really appreciate you guys. No doubt about it. Would like to ask everybody to do me a favor and smash some buttons. Help me grow this channel. Hit that like, hit that subscribe so you never miss a future stream. And if you do me the favor of sharing this thing with somebody before we start, that would help us grow the channel even more. Really, really appreciate you. For those who don't know me, I am a full-time trader. I'm a work-from-home dad, and I'm co-founder of Material Indicators. And before we even start, I just want to cover a couple of things for you. Like, first and foremost, like this is some price action that is worthy of your attention. You really need to pay attention to what's happening right now. If you think that 8 consecutive Bitcoin candles mean the bull run is back, well, you could be right. But if you think that this is a trap before a reversal, you might also be right. Because right now, Bitcoin is at a level where both scenarios are still in play, and most traders are about to pick the wrong one. I want to make sure that that doesn't happen to you. So we just pushed to 76K like last night, my time here in Eastern Standard Time. We pushed to 76K. Sentiment for a lot of traders flipped like almost instantly. And the noise on crypto Twitter is just insane. Bulls are calling for a continuation. Bears are calling for a squeeze. Everybody's like, hey, this is the move I told you we were waiting for. Well, maybe that's true. But what's interesting is the chart's telling a very different story than what you might be reading on social media. And in a minute, I'm going to show you something that the data that explains what's actually going on behind this move. Because if you're reacting to the price action, you're already too late. You need to know what is pushing things. So the biggest mistakes that a lot of traders are making right now, they're getting pulled into narratives. They're prematurely jumping to conclusions. Everyone's trying to explain the move after it already happened. And that's how you get caught in fake outs. So the market does not reward those opinions. The market rewards people who understand structure, liquidity, and momentum. And I'm going to share all of those things with you today. So instead of guessing, we're going to break down what's actually driving this rally, whether the 8 consecutive green candles are signaling strength or are peaking exhaustion. And more importantly, I'm going to show you a number of scenarios that will give us an idea of what needs to happen next so that you're not reacting late and you can actually plan. All right? Sound like a plan? I hope so. So let's forget the cesspool of misinformation and focus on what's in the charts. And to start, I'm going to go ahead and share. I'm trying something different these days, and that's starting with a clean, simple, basic chart to show you where we're at, and we're going to build some layers of data and information on top of this using some indicators and some technical analysis, and give you a sense of where things are. So if you look at this, you see a candle chart, you see 1, 2, 3, 4, 5, 6, 7, 8 consecutive green candles. This is not a common occurrence. It has happened. Okay. It's happened several times in Bitcoin's history, but it's not a very common occurrence. And initially this looks like, at a glance, you're like, here we go. This is a rally. We're doing it. And, there are a few occasions where we've seen some big moves like this, not necessarily 8 consecutive candles, but you see rallies like this one might be. I haven't even counted this. 1, 2, 3, 4, 5, 6, 7. That was 7. So not quite 8 there, but The point is, there's a big difference in what we're seeing now versus what we saw then. This one is actually compelling. Let's see, one, two, three, four, five, six, also seven candles. So this was the bottom of the 2022 bear market, right? This was the FTX crash, et cetera, et cetera. We had broken down after the bull market. Had broken down after that 2021 top, and then started to uh, build some foundational support. And we had the FTX crash, took us down here to the 15 and change level, and we started to climb out. This is after calmer heads started to prevail, and we went back for a support test, and then boom, this is where we really confirmed that things were structurally sound after some consolidation, and started to build leg up after leg up after leg up. But the difference is in in bear markets, when you see consecutive candles like that, and I don't one, two, three, four, five, six, seven. Here we go. One, two, three, four, five, six, seven. Here you go. Here's eight. What happens here? More breakdown, right? We have this was a fake out, and more breakdown. So the point being, the biggest difference just between a rally like this and what we might see in a bull market scenario versus a bear market scenario is that this is most likely going to probably revert. Okay. And so you could say, well, hey, there's no way of knowing if this is actually going to turn into something like this scenario in 2022, where we consolidated for a while, and then there was the actual breakout that took us to the bull market. That's a fair statement. Absolutely, that's a fair statement. Um, so before we get too far ahead of ourselves, let's just look at some things that might be influencing the how we even got these eight consecutive green candles. Obviously, we have this war going on in the Middle East, and this has more than anything probably illustrated a use case for Bitcoin. Obviously, uh, people in Iran and other affected areas are suffering power outages. In Iran specifically, their sovereign fiat is next to worthless, and people can't get to the internet. They can't get to their banks. They can't get to their cash. And if they have Bitcoin in a hard wallet, they're probably considered rich in that region of the world. It's certainly a important use case for Bitcoin. That's just one element of it. Of course, the TradFi markets also had been coming off of all-time highs. They had also been testing bear market support levels. I mean, look at what happened to the Nasdaq Composite down here. Actually flirted with the 200-day moving average and recovered here these past couple of days, still below the 20-day moving average, and so this is still in an interesting zone, as are the other indexes, the S&P and the Dow Jones, all hovering in a range below key moving averages, and just hanging on to that 200 at the moment. So that's another element. Probably the thing that has driven things the most is the fact that we have had institutional adoption coming on pretty strong here. Well, not adoption, we've had the adoption, but inflows coming on pretty strong here in the past 1, 2, 3, 4, 5, 6, past week or so. Okay, so this would be the 8 days if you added in the weekend, right? There's no weekend trading here. So this shows you inflows coming in from the institutional side. We know that Saylor buys, and I would say this over and over again: don't let Michael Saylor buying be something that influences your decisions. He buys the tops all the time. He has an agenda. He's trying to prove that he's not scared to buy the local top because he thinks that Bitcoin is going to go to $13 million someday, and it might. But this is not a guy that is timing the market. This is a guy that has a strategy, and he must continue to add Bitcoin value into his stock price as a treasury company because he is losing value. So it's how he offsets the loss of what his stock is doing by adding more Bitcoin value to each stock share. So do not pay attention to what Michael Saylor is doing as if that is going to influence your buying decisions and overall price. It just doesn't. I mean, long term, he owns a metric ton of Bitcoin, and he is probably the largest holder next to Satoshi Nakamoto, wherever he might be, and wherever his million Bitcoins might be. So there's that. But this is certainly a fundamental reason why we've seen some influence in Bitcoin price over the last 8 trading days. No question about it. And others have followed, right? So there's that. Now, if we go back to the charts, let's start to layer in some technical things that make this compelling. All right. First, we'll bring in the moving averages and the fact that we have RS flip the 21-day moving average. This is important. And so is the trajectory that the 21 has taken, because it's rolled up in a significant manner, and it is now on a trajectory for a potential golden cross with the 50-day moving average in the coming weeks, likely before the end of the month. Let's just model that out really quick. And this is just a really rough model. This is not anything to cling on to, but just to give us an idea, if price were to stay on this trajectory, what would it look like? When would we see this? When would we see this cross? We're going to see it relatively soon, as you can see, especially if the 21 stays on this trajectory. Let's see, we're like about like so, something like that. Close. That's close enough to the pin. And let's make this green so it matches. And we could say that this is likely to happen here by the end of the week if we stay on this trajectory. So that's a bullish signal, short term, low time frame. Now we add in the 100, and we can see we have resistance up here, and this is at the 80K mark, right? Almost 80.5K. That's a significant level. You hear a lot of people talking about, hey, this rally could go to 80K, and that's why. And so obviously we also have the 200 moving average way up here at the 93.5K level. So those are important. All things to keep in mind. But let's start layering in some structural stuff here. Okay. So regardless of this, we do have the fact that we are still in a, no doubt about it, bearish macro structure. Okay. No question about this. No disputing it whatsoever. However things resolve, even if we come up to here and range back down, however this resolves, price will be forced out of this structure no later than mid-June. Sure, it could happen this week. We could shoot right out the top and boom, it's off to the races. But we could also get a rejection from here or any number of places before price resolves. However it happens, at the very latest, price must make a decisive move out of this structure no later than June. Keep that in mind. Thank you, Siri. I didn't ask you. So then we have the other elements of where potential resistance levels could come from. and some that were flipped that are very important. Very important that we flipped this 2021 top. Why we spent forever, seems like forever consolidating here. It's only been about 5 weeks this time around, but we did spend 8 months here after first revisiting it 2 years ago, literally to this month, right? March 4th, 2024. We completed the cup of this cup and handle pattern, and that was the first time we revisited 69K since the 2021 top, and we consolidated under this range for 8 months before breaking out on the Trump pump, and the rest is history. So this is a very significant level, and it's understandable why we've spent so much time consolidating here. Um, and so breaking above this decisively is inherently a move that feels inherently bearish out of context. Okay. But in the context of where we are in the structure, still very much in a bear market, this is important. Um, so, in terms of whether price could go higher from here or not, I want to paint for you another structure within the structure on a micro time frame, if you will. I actually already have it drawn, so rather than do the artwork again, let me just go over to this chart, and you can see that we have a bull flag. Excuse me, a bear flag. Big difference. We have a bear flag forming here, and or formed, I should say. And so let me even turn off the moving averages and make it nice and clean. So this is a classic structure. You can see that this would be a logical place for a rejection based on this because of the fact that we wick past the structure, and now what happens? Well, we have at the moment we have an indecisive doji candle forming. Um, And dojis are indeed a sign of indecisiveness. But we have a doji candle forming for this ninth candle here, which is a sign that, hey, the market's not really sure what it's going to do from here. Well, if this plays out and validates as a bear flag, if we take a measured move from the top of the flagpole, then depending on when this plays out, if this resolves back to the downside, we could be looking at a 33%, 34% correction from this structure, meaning the bear flag within the larger macro structure. And that would get priced down into that mid 40s range. And I've spoken of that range before. Um, in fact, I've shown you that range before in other analysis, and you can see I have some zones of interest here. Where can I illustrate that best? Actually, here on my original chart, where we had prior consolidation in this range, in the 40 to 45K range. So that would put price potentially right here as a measured move from this bear flag that I just showed you. That's formed here and here. Um, that's consistent with an analysis I did way earlier. Now, I still think there's other potential targets, right? This thing could turn around. Ending this war could be a catalyst. Ending the war and signing the Clarity Act are two things on my radar that could be a catalyst that could really trigger a bull recovery. Neither of those things have happened yet. It's not anticipated, despite what El Taco says. It's not anticipated that that's going to happen in the next week or two. And so this is why we have to remain open to uh, any possibility and probability. So let's say that things continue and this rally continues with momentum, and I really think that if price can hold above, really hold in this range, and we can get a weekly close up in this range, then there's a chance to go take another crack at going higher. Now, what are the targets for that? I'm actually going to bring the moving averages back in. Well, at least this one, 80 is a popular target. We've heard a lot of people talk about this. but I also want to introduce some targets that most people aren't thinking about, and that's these timescape levels. You'll notice we have a series of timescape levels from 2025, Q2 of 2025, that straddle this moving average. One of them is at 78.5, and the other one is at 82.5. So anywhere in this zone looks really, really interesting to me. If we are to break the structure, then and only then can we start thinking about this developing into something more. And quite frankly, for me, and this is personal, for me, the real level that needs to be reclaimed to really consider a potential full bull market recovery is this timescape level right here at the yearly open. We have a cluster of those the first week of the year and Q1, I might add. I mean, the first day and the first week. So those are at 87.5, actually like 87.3 and um, and 91.3 respectively. So this is a very important zone to be watching, in my opinion. Um, Again, unless we break out of this, it won't matter. But if we do, you still risk a potential fake out until you get closes above these levels here, especially the yearly open at eight. Well, I said 87.3. It's really 87.4 and change, depending on the exchange that you're on. So anywhere in this region, right? Gotta have a close above that yearly open to really entertain the idea of this developing into a full bull recovery. And even so, even with that, we have our last parameters that will, in my opinion, validate a recovery, and that would be a combination of things. It would include, let's go to the weekly time frame for that. It would include a recovery of, obviously, I said the yearly open, but what we really will need to see to start celebrating the bull is a recovery of the 50-week moving average. That means full candle bodies and closes above the 50-week moving average. Also with the weekly RSI above this 41 range. And that requires closes above this level. You can see we had a little fake out here back in January, and it did not. It tested the structure, but it did not resolve into a breakout. And so, why do I think we're still bearish with all of this information? Um, well, I think we're bearish until proven otherwise. And so, until the structure is broken, this is still a bear market because of the fact that historically bear markets have taken close to a year to resolve. We're nowhere near that, right? If our high was in our all-time high was in October, then we're looking at Q3, Q4 until we likely have recovery. Now, could this be different this time? Sure. You hear that a lot of times. Hey, this time is different. It could be, maybe it will be, but so far it's not. And so this is something that we've got to pay close attention to. We still have this death cross here between the blue 100 week and the green 21 week moving averages, and this is a lagging indicator. It could still resolve. Now, there's two different scenarios we've seen with this historically. In some cases, it has led to the next leg down, as it did in what a lot of us have been pointing out. 2022 has lots of similarities to what we're seeing right now. And in 2022, we saw this death cross, and it took us to another leg down. So the similarities are starting to deviate with this candle because back then we had one weekly candle that was green leading into the death cross, and now we are on pace for potentially a third weekly candle. that grows green. So we now have a bit of a deviation from this fractal that so many people have been sharing. And fractals are good until they're not. So in other scenarios, if we go back to prior death crosses, we can see back in 2018, we had the death cross, and that actually marked the bottom. So we're about 50-50. And I could go to the other couple of times that this has happened, and it would be, we'd still be 50-50. Here we go. We had another wick down after this death cross in 2015, and then things resolved. And if we go to here's 2018, this was the bottom, etc. And 2022, another leg down. So you're 50-50 on what that means. So we might not, right? At this stage, I'm still leaning on the I guess the macro analysis that we're still inside a bearish structure, and this is likely to resolve bearish. Now, that target I gave you in terms of that measured move, that is indeed one possibility and a good probability. There's a lot of sentiment for this 200 week moving average, which currently sits just below 59K. That's obviously the near range target. We came very close to hitting it back at the beginning of February. This is obviously a popular near range target, keeps the structure intact, keeps everything happy. It really depends on how long it takes to get down here. If we do indeed get a rejection and head back down here, it depends on how long it takes to get down here. And again, I said this a couple of weeks ago, I think. If when I say I think, I don't remember if it was a week ago or a couple of weeks ago, or maybe I've been saying it for weeks, is depending on the timing, right? If we can estimate that the bull market is likely to find its bottom sometime around Q3 or Q4, maybe it's between September and December, right? Sometime in this range. Then if it took a long time to grind down here, I mean, if it took till June to grind our way out of this structure, then we could conceivably go, okay, July, maybe this will hold. I happen to like this target at 54 because of the double bottom that we had here. And it's an overshoot of this technical level. And we know how this market likes to overshoot the technicals. So this is why I have some interest in this target, but I cannot overlook the fact that we had this prior consolidation down here in the mid 40s, and that measured move that I just showed you takes us right to that level. So if again, if it takes us until if it takes us until September, October to get to this level, then I like this level. But if we get to this level in Q2, then I'm looking to this level. Simple as that. So I hope that's given you some insight as to what was behind this move, and what levels to watch to determine if this is going to, excuse me, if this is going to develop into a breakout, or if it is more likely a fake out. I'm personally leaning towards fake out in terms of what I've seen so far. However, and this is important, I remain open to being wrong. I remain open to changing my bias based on what the charts are showing me. I'm not coming into this so biased that I can't look past what I see in the charts, and you shouldn't either. You got to remain open to seeing things change. You have to be open to invalidations, and the invalidations are up here. Clear this yearly open decisively. Give us that 40-week I mean that weekly RSI above the 41 range and above the 50-week moving average, and you have a bull market recovery. Until that happens, everything else is noise. So, how do you prepare? I would say you don't change your plan unless you see something that tells you that that something has changed structurally or fundamentally, and so far it hasn't. So, if you are squarely in the bear camp, then you're looking for a potential shorting opportunity, whether it comes from whether we remain pinned in this range and it comes from here, or we push on higher into this 78 to potentially 82 range, even on up to the structure. Where's the structure now? Is it structure's at 83.7, right? If we hit it, if we hit it today, and with each day it comes down a little bit more and a little bit more. So so anywhere in this 78 to 82 range looks very, very interesting to me as a short. Obviously, a decisive break above this, and we could wick above it, but I'm talking about a decisive break with candle closes and full bodies above this. That's a different story. And so that's what I'm looking for. And even if we were to wick above this yearly open, there's a very, very high probability that if and when that happens, whether it happens now or whether it happens in December or in Q1 of 2027, whenever it happens, there's likely going to be a retest of support um, to validate a breakout from this level. And so that's what I'm watching right now. This all looks very much like a fake out attempt, and it might not be done. Now, what's holding it up? I told you liquidity, something really, really important, not just liquidity, but also the order flow here. And so we know that we had a big move that uh, helped and something else I can share with you in terms of what got us those 8 green candles. You can see here the green order class. This is $1,000 to $10,000 orders. These guys have been T-whopping for a month straight. If you're not familiar with what that is, it's a time-weighted average price. They're basically um, on a timer. They're buying the same amount over and over and over again, market order. They've done so to the tune of, let's see, how much? Um, 559 $559 million in the past 30 days. And so that's significant. No question about it. But look where the other order classes are down here. Nowhere close to that. So purple whales, they've done 32 million. Brown mega whales, 7 million in that same 30-day time frame. So and that's a net of buying and selling. So keep that in mind. As we zoom into the lower time frames, we can see that, and go back to the normalized view, we can see that the green order class seems to be back on that trajectory. Not 100% T-whopping, but it seems like there may be some T-whopping going on in that order class. But look at what happened here. When we peaked last night, even before that, uh, brown mega whales started selling, purple whales started selling, those red sharks, they started selling. So the larger order classes started selling. And this is a sign that this is not a durable momentum move, because there's profit taking happening here, and it's happening with some volume. I mean, they literally sold 100% of what they had bought uh, to get us up to that rally. And then they started buying back in incrementally. This is buying dips and selling rips, my friends. So keep that in mind as well. The order flow now, if we zoom out a little bit, and the order book, even potentially more importantly, we can see that we have more liquidity stacked above, all the way up to that 80K range. It actually goes higher, but the bigger concentrations are up to 80K right now. And so be mindful of that. And this will change. This is going to change probably every day. We're going to see this dynamically shifting. Are we going to see bid liquidity move up and try and push this up? Or are we going to see it start to erode and price will fade back? And are we going to see more stack here? Or are we going to see a roof pull that opens the door up to 85 to really, really screw with people? All of those things are possible, and so we need to be monitoring very, very closely what's happening in the order book. This is showing us what's happening behind the candles. Okay, if you looked at this last night in real time, you would have known that price was about to dump because the selling began, and it began in excuse me, right here. You would have known that the price was going to erode because of the sell-off that began here. And you could see it here plain as day, visually displayed for you in the bin CVD. So all of these things together are really what is telling the story, and that's what you need to pay attention to. I'm going to leave you with a parting shot here just to remind you of the levels that you should be watching to determine what the next move is going to be. If it's going to be a legitimate fake, I mean, excuse me, a legitimate fake out. If it's going to be a legitimate breakout, we're ripping through all of this, taking the yearly open and moving on up um, into this territory where we have the 50-week moving average all the way up here, and reclaiming this. And look where that is. Isn't that convenient? Right there at the January 6th, 2025 timescape level, confluence. Not That's not lost on me. When you see these timescape levels have confluence with other structural um, technical levels, whether it's a moving average or the structure here, that adds strength to those levels, in my opinion. So keep that in mind. Our levels here are actually, if I take it down to the daily time frame, you can see we have 78 and 78, 80, 82. This entire range is the next range of targets if price can push past this bear flag right here. But there's no question in my mind that this is a bear flag, and there's no question in my mind of how these tend to resolve. So really the only question is, do we get another wick, another attempt to try and invalidate this bear flag? Or have we seen everything it has to give? Time will tell. All right, guys, going to wrap it right there. Again, if you haven't done so yet, do me a favor. Don't forget to hit the like, hit the share, hit the subscribe so you never miss a future stream, and help me grow this channel. If you have not joined our Telegram channel, it is absolutely free. Link to it is in the description down below. And of course, if you want links to any of the tools, you'll find those in the description below as well. Thanks again for the follow and the support. Greatly, greatly appreciate you guys. Hope this helps you gain some insight and ultimately trade smarter.